Now, last but not least, part 4 of the morning fireworks. I pleasure to present you Klaus Tischhauser. He is the CEO of responsAbility investments in Zurich, starting off in business administration from Zurich University of Applied Science, and then having an extremely interesting biography, cycling through Africa for 2 years and learning about the real life, which then somehow probably also led him into his responsAbility, working for sustainable asset management, involved building up the SAM company, executing the first IPO of an investment company that was focused on these topics. And now since several years, he is the co-founder and the CEO of this responsAbility investments. His poetic title is "The Wind of Change Blows in Finance, but Why Are We Building Walls?" The floor is yours.
Thank you very much. Good morning, ladies and gentlemen. Yeah, it's nice to be introduced as a poet or someone who looks or knows the real world. Indeed, I think what I would like to do, I would like to talk about what I would call real finance. This is not the first intervention on finance. We've heard more before, during the morning. And what came a little bit to my mind was that when I listened to the questions you were asking to Professor Hens, that most of the time, you were not necessarily referring to the 3 fundamental functions of the financial system, but actually, in my view, of a 4th that has developed over time, a new industry, which is basically a gambling industry, and which is not all the time really investments in the real economy. And what I would like to discuss here a little bit and raise your awareness for is one part of the financial system that works, maybe some hope, but certainly some financing and some investment activities that go into real economy. Now, when talking about future economic systems like we do in these settings, I think then often the emotions that are around, they circle around frustration, with what we have, criticism, skepticism, of course, search for alternatives. And of course, particularly in finance, you've heard it, there's of course the sentiment of a deep crisis. I think a typical reaction in such an environment is, well, that you want to get rid of the whole system altogether. And this economic system somehow, or the financial system, reminds me of a big machine with a lot of knobs and buttons and switches and turn wheels. And somehow it doesn't work so properly anymore. It doesn't produce the intended results. And we know that from machines we have at home, then we normally think, come on, let's buy a new one. Maybe the same again, but you know, a new one. Or we start questioning maybe the entire technology behind and think, come on, this is not the right thing. And we start thinking about totally new technologies, which are totally future-oriented, or we go backward and maybe into the Stone Age and dream of something else. But I think despite of all these doubts that I sometimes understand when talking about our financial system, or the economy, then I'm not sure whether it's really about the engine, whether it's really the engine that's the problem, because it contains a lot of know-how that has been built over decades, over generations. There's a lot of technology in it. And I wonder whether it's not rather about the settings, about where we turn and all the combination of all that. And whether maybe the operators of the system somehow messed it up, and we have lost the manual, don't know exactly how to put it right, or a lot of operators are intervening and turning around all these things with opposing views. Another question, who are the operators? Is it a few people who are managing this system, maybe with a hidden agenda? Or is it maybe something else? So these are a few questions that go through my mind. I guess also through many of your minds. And I'm actually glad that the organizers set a more moderate title, which is How Could the Financial Architecture Be Improved? And not one that just suggests that we should really get rid of it entirely and replace it by something new. I am glad because I personally firmly believe that the system itself, this machine, this engine, is actually not the problem. I believe it's the settings. And I also don't think that it's a few characters who are steering this, although this would be great news because then you can blame these people and point at them. You could maybe also replace them and then, you know, it would hopefully work better. I rather believe it's a much larger group of people we have to address, and maybe it's even all of us. I will come to that later. So that's what I would like to talk about in the next few minutes. And I must say what I've heard here throughout the morning, a few of these things, I think I will repeat them, which is maybe good news because it means that there is a divergence of ideas. I would like to share some hope, of course, with you, but also some frustration. And hopefully at the end, I can also talk a little bit about, well, what has to be done, which is, I think, the motto of this morning. What should we do? But we all know this is a difficult task, so I don't think that I know the big solution to this big task. Now, ladies and gentlemen here in the room, I believe that you are all here because you care about all these things. I mean, discussion about a better economic system, about a better financial system. That's why you are here. And I think you also would like to contribute to that better system, like I do. And now, interestingly enough, and I know you all know that and are aware of that, for all of us who do care, there has been a recent development or a recent announcement which I believe is quite important. Just a few weeks ago, the United Nations have announced the so-called Agenda 2030 for Sustainable Development and the so-called Sustainable Development Goals, 17 goals, which collectively somehow represent the world's collective high-level action plan. Maybe it's the vision with a deadline, so that we know how to get there. In order, well, the objective is to make the planet a better place. I'm sure that all the young people here in the room, they know what they expect from a better planet, and are certainly eager to see that the global community walks into this direction. Now, as you also may know, the SDGs, as they are called, they're not something new. They're the continuation of the 8 Millennium Development Goals United Nations have set back in 2002. Also with the great objective to halve poverty by 2015. And I don't want to go into the details and assess whether this was a great thing and whether all these objectives have been achieved. I also don't want to question whether 169 sub-targets are, you know, an intelligent thing to do. There's always something that can be criticized. But what I would like to concentrate on is that, first of all, I think we all agree that having such global goals is something important to coordinate more and also to increase the accountability of all those people involved. But what I would like to do is to emphasize, to start with, to emphasize what big changes actually are behind these 17 sustainable development goals, because they are fundamentally, to some extent, fundamentally different from the 8 Millennium Development Goals. First of all, what was new is that not only a handful isolated technicians have come up with those goals, but this time around it was a large-scale approach where a lot of experts from around the globe and all areas you can think of have contributed. So I think the basis is much better. But now the key things that have changed are, first of all, those goals are not only isolated and focused on developing countries, but it's now a global agenda. So topics that have not necessarily or directly to do with developing countries are also part of these Sustainable Development Goals. Secondly, economic development as an overarching topic has been integrated much, much more. The MDGs, they were looking at the problem and said, let's solve child mortality and things like that, which is, of course, a terrible thing. But meanwhile, the global community has realized we need maybe to tackle overarching areas like economic development, which is key to so many things. A third new aspect is that people start talking about financing this. So financing becomes all of a sudden an importance, and numbers are now thrown out, and they are in the tune of more than $4 trillion a year that are needed to move into the right direction to make this planet a better place, to fix somehow also the economic system and to some extent also the financial system. Because so much financing is needed, something additional has also been integrated much more than before. That is that the private sector must do this. The private sector must be involved, because else, just with public funding, just with public actors, that doesn't work. Very important, I believe. It is something really new. And so the keywords are, in the end, besides economic development, financing and private sector. And this puts the financial system we are talking about here sort of at the heart of this big hope that this is the plan to change the world, to make it a better place, and all of a sudden we realize, oh, the finance system plays an important role. Unfortunately, it is exactly this system we feel is so much in a crisis, which is, of course, sort of bad news. Now, the question here is it really that bad? Now, let me dwell a little bit on some developments I personally consider extremely positive, and I think they are often overlooked or just unknown. And I think I was invited here to speak because I'm involved in one of these positive developments. So my hope, you may sense I'm a positive person, so my hope comes, I think, from this work as a practitioner in the company I have founded and work for. As you have seen, it's called responsAbility Investments. The title of the company name is a combination of responsibility, so it's made for people who feel responsible and would like to do something with their money. And the other part is ability, companies that have the ability to change the world in a better way. And the company wants to bring these people together. So it's basically what now the United Nations also say. The capital flows have to go into this direction. So I'm talking now a little bit out of my daily work, what we do. So it's not a commercial about the company, but it should just show you what exists in case it's not known to you. So it's a small company which employs about 200 people, 100 of those here in Switzerland, and the rest are scattered around the world in Kenya, Peru, Costa Rica, India, Thailand, and Hong Kong. We manage about $3 billion and invest them in developing countries, about 90 countries, in about 500 companies and some projects. And I think from this position I can witness relatively well what actually works and what doesn't work. And now with a specific focus on financing, investing, and the financial system. Not the entire financial system, but the part I'm involved in. Now let me start with what works. Well, as an asset manager specialized in development investments, as we call it, we do, as I said before, exactly what the United Nations want to promote with the Sustainable Development Goals. We channel money to businesses and projects in developing countries in sectors that are important for development, like agriculture, health, education, finance, and energy. We finance development in order to promote prosperity, so I think there's also an alignment of goals. and prosperity for all. And in this, we also have to cooperate a lot with the public sector, but we try to use as much private capital as possible, and the bulk of what we manage comes from the private sector. In the end, we build investment solutions like mutual funds that are offered to people like you and me. Maybe there are some clients of ours in the room. I would hope so, because all the banks here offer these kind of investments. So we work with the banks, we understand their problems. We are a regulated entity, so we know how the regulator thinks, how regulation works. We have heard this word so far a lot, and I can tell you, you will hear it a little bit more in the course of what I'm saying. And this is the fundraising part. And on the investment side, as I said before, we invest along the agriculture value chain in order to increase the incomes of farmers in developing countries. We finance the building and the operation of financial systems that serve all people in developing countries. The buzzword here is microfinance. We finance the production of energy, renewable energy in developing countries. And by doing that, we have become the largest private sector investor in microfinance worldwide. Probably something most people don't know, but that comes out of Switzerland. We are the largest financier of fair trade activities worldwide, also something that comes out of Switzerland. So these things work fairly well, and most of this is done with private money. However, I must say, in all these activities, the public sector still plays a very important role. That's why also the UN say there is a strong call for the private sector to do much, much more, because so far this is predominantly in the hands of the public sector. So you can guess that with all of this, as a company, we are pretty much in quite a good position to see a little bit what works and what doesn't, and understand all these elements and how these work together. And I must say, the good news is, it works. I mean, we see that private individuals, also institutional investors, show strong demand. They invest in these kind of things. I have observed this now for about a decade. So there is strong demand. The institutional investors who normally need a track record, they are also coming in very strongly. Banks are happy to offer these kind of products. Of course, the investments produce a return. And the private sector, as I said, is really very active. 80% of these 3 billion are private sector money. So maybe your money, your pension funds money, your individual money. And this is only one company that does this. And we're doing exactly, as I said, what the United Nations are suggesting. So actually, and we do it in the current financial system that apparently has problems, but there are areas that work. So that's actually quite some good news. So one could say the wind of change is blowing, yes, in the financial system or industry. So where's the problem? Now, recently I was speaking at another conference where people also were full of hope, as they often are when I speak. I mean, not because that's not causality, it's a correlation. And I was asked at the end, well, Klaus, great to hear what you say, but there's one question. Why are there not more, let's say 30 or more companies like responsAbility? And even if you're the biggest player in this industry, with 3 billion, I mean, you're not that big. Why are you not much bigger? And I think that's an interesting question. I mean, I showed you now there is that big plan of the United Nations. There is a need to be financed, so one can finance. There is people who invest, so the flow works on both ends. There are companies who show it can be done, but still, there's hardly any other company who is doing that. And we are the biggest with 3 billion. There's a problem. What is the problem? What stands between those two areas, the ones who want to invest and those who need the money? And now comes the repetition of that famous word. I'm so sorry. The problem is regulation. I know it is super boring to talk about regulation and the consequences and you know, the details, But I believe this is so important that, yeah, I'm now touring around and preaching this regulation thing. And I know that, the financial system has shown it can be an animal that needs to be tamed. It's a dangerous animal, and clearly we all agree it needs regulation. So, twisting these buttons and switches and all these kind of things, it's needed. But maybe it has also some undesired consequences. And I would like to talk about these undesired consequences because they are quite severe. And the one thing in regulation, we've heard that as well, that is often targeted is actually the fact that we want to control risk. And I think that controlling risk has various sides, turning this switch, this control button, and what it does, it is actually something very bad for innovation. And here I also would like to get away from my company or the company I work for and that specific topic. But if we talk about risk and if you want to get rid of risk, then I think we are talking about anything that has to do with the future, because the future by definition is risky. We don't know what it is. Anything that is new, innovation, normally starts small, with a lot of unknowns, so again, risk. And my big concern is that with the regulation I understand and the reasons for it, but my big concern is that with that very strong focus on that risk control button, that we are doing something very, very dangerous for our society, not only in Switzerland, but I think on a global scale. Talking about risk, I mean, this is now theory, and I don't want to bore you with that, but I just would like to repeat that. We all know that anyone who can take risk, be it as an individual, be it a business, be it a society, a country, can actually move into a better world, because you can try new things. You can save for the future, all these kind of things. Risk and the future and innovation are extremely strongly linked. And a society that can't take risk or is not allowed to take risk or that doesn't want to take risk, I think is in a situation where standstill is absolutely is a sure thing to come if risk is not being taken. And let me remind you also of what Thorsten Hens said, the financial system, financing, investing, and so on, banking is a core sector, a core industry. It's actually an infrastructure of any society, and it is a very important one. And so there's a big hope that is associated with it, and one of the key elements of the financial system is to deal with risk, to transfer risk, to diversify risk, but not necessarily to avoid risk. And I think we are now more and more going into a direction where we want to avoid risk. Just remember what Mr. Karras said in his last few words. That's in the end what we do as a society. We don't want risk anymore. Now, I think what the regulator wants in the end to tame the large players, because we are afraid of the risk of wrongdoings of larger players. But in the end, I think what the undesired consequence is, as I've already said a little bit, is that this has tremendous consequences on anything that is small. Because regulation has a cost. What does that mean? If all of a sudden a business has higher cost, small businesses can't afford this. Because it's not just a percentage of 1% more cost. It is a fixed cost that anyone at the minimum needs to apply, and that kills a lot of businesses. That's in favor of large businesses, actually. It's not good for the small ones. So the big ones who should be tamed benefit from that. Payback periods of new projects, of new businesses, become longer. They will never be started, these projects. Businesses are less profitable. What does that mean? People are not entering a certain market. Why are there not more responsibilities around? Maybe our business, for us, is not that profitable, and therefore others say, well, we see it's great what they're doing, but, well, should we enter? No, it doesn't really pay so nicely. Consumer protection. We want to keep away the risk from us, the investors. Has a big bill, again, for all those who are in investments, because you have to fill in all these forms, a lot of things, and in the end, that's my experience, we work through banks, in the end, the banks don't want to do these crazy new things anymore. They just want to concentrate on what's known, what's always been there. Basically, they want to sell things that, where you can invest in the stock market. Listed securities, these kind of things, the simple stuff. But that's not the whole world. That's not all about what financing is about. Think about the United Nations goals. That's not about listed stocks. Not at all. That's building the new world. And that's far away from stock exchanges. But our regulation actually is built in a way that everything is okay that has to do with today's world and today's financing activities, but everything that is new, small, inefficient, and has to do with tomorrow is actually considered bad because it's risky. And the message of the regulator, the politicians, a little bit also our society is, if you do these things which are not known, they're bad, you better don't do them. Pension funds, they are big asset owners. Pension funds, there are some who would want to venture into these new things. But if you're a pension fund manager, you're told what is good and what is not so good. If you do things that are not so good, well, you have to fill in a lot of forms. You have to report why you are doing this. The latest thing is, or one of the latest things is, that pension funds have to report on cost. What is the cost associated with investing? Obviously, this sends the signal, cost is not good. The cheaper, the better. Well, what does it mean? You invest in Nestle or in Novartis and so on because this is cheap. You can invest a lot of money at a very low cost because it's there. It's totally formalized. Everything can be done electronically. The stuff we are doing, things most people would think, well, yeah, that's great. It's extremely costly. Still, the returns are okay, but just the cost block is much higher because we do everything by hand. Regulation hates this. This is not good. You should not do this. This is what our regulation tells all those who have the money and who would maybe be willing to invest. And therefore, I think the list is much longer. I could go on for maybe a bit longer, but I don't want now. But I think you see the mechanism. We all say, yes, we need to protect people, we need to protect our system, and so on. But we do at the same time also something else. So just turning this small risk button also has undesired consequences. And I believe that these consequences are so dramatic that I would also call these consequences system relevant. However, the consequences are just coming slowly, so we're not really realizing. And one day we wonder, why is there no innovation? I can tell you why. I believe it's because of, and I think Mr. Carrer also tried to say a few of these things, has to do with regulation. Now, I would also like to repeat here, I am not the representative of large corporates, which you, to some extent, might be, because there people then say, they don't want regulation so that they can, do what they want. That's maybe the case, but it's also bad for the small ones. And again, small means the future, it means regulation, it means innovation, and so on. So, now let me come back to the Sustainable Development Goals and what this now all means for those Sustainable Development Goals. The big hope we have that the world becomes a better place. Well, the consequence is that those who want to invest because they think, yes, we would like to do that, and often this is the private individuals, that's my experience from my professional life, they can't invest. We are not allowed to offer these investments in most of Europe and most of the world. We're not allowed to offer this to private individuals or a large number of private individuals. Those who could invest, the pension funds, for instance, they're not allowed to invest. Or it's made very difficult for them, or they need a track record, which means, yeah, come back when, you know, when I see that it works. So they don't want to take risk. And you see, I started with a lot of hope, but unfortunately, I also had to end a little bit with frustration. And it's sort of a warning here I would like to express. And I said, who are the operators? So who should I warn? Is it a few people, 2 politicians, you know, and then they can sort it out? No. I said at the beginning, I believe that in the end, it's maybe all of us. More and more we want a streamlined society. We have lost the fascination for risk. I mean, risk is in the end the flip side of the unknown, testing something, innovation, the future. I think that's now the conclusion, I hope. It's not really very concrete, but if as a society we can regain some positive attitude towards risk-taking, then I think all the rest will be a logic consequence. It's a long shot, I know, but there are no short tracks to that. That will be my big hope. Of course, incentives. Banning short-term orientation, more long-term orientation, I think is also, of course, very important. But here I think we can discuss this with the experts, and I leave this to others. But please, every single one here in the room, reflect whether you are not also a little bit part of that problem, that you think, well, the risk stuff is not so good. I want a risk-free world. If you want a risk-free world, we will get it maybe, but we will not have a future. Thank you very much.
In risk-taking when you are young and when you're old. So typically older people take less risk than younger people, and since we are living in a society which is aging, it's clear to me that there's less risk-taking. And the second problem is the young people take, from my point of view, they take the wrong risks. For example, they do bungee jumping, or they do free climbing without a rope, or they do speeding with the cars. Why is this? Because the financial system has a bad image for them, as you have heard from the comments here. So I think it's our responsibility to basically redirect the risk-taking to something useful. For example, investments in your responsibility.
I think it was not necessarily a question. It was a comment, and I agree. Not all areas of society are becoming risk-free. But maybe it is because of that large parts are becoming risk-freer, and there's less room to maneuver, that people, they want the gorging system, and then they venture into these kind of things. But just if we keep it to financing and the collective behavior with our, the large chunks, not necessarily talking just about the individuals, but the large chunks of money in pension funds, for instance, I think they react like they are told to react and act based on a collective system. And that's, I think, something that reflects a little bit our society.
Yes.
I just want to
Please take the mic.
Add my voice in support to what you said, and I congratulate you on having studied the SDGs. I think really all of Swiss industry also needs to look at it very carefully, because this is a huge, huge opportunity. As you mentioned, the MDGs were not negotiated, nobody was committed to them. They didn't look at very important sectors like energy, etc. And I think really this is a major business opportunity. I endorse what you say. And again, you're correct. You need to find the financing, and this time it's not countries that will do so. And even if they're not achieved, even if the dream is not realized by 2030, even if they're 80% achieved, that is a big opportunity. And countries are committed to it now, unlike to the MDGs, which were indicated, which were drafted by UN bureaucrats. This is now something that the world leaders have agreed to. So you can go to every country and say, you know, your prime minister has signed up for this, and these are the things you're going to do. And this is how we would like to move ahead in cooperating with you in doing these things. So really, I think you're on the right path, and I think for Swiss industry, and recalling the previous speaker's comments, you were talking about the transatlantic trade and investment partnership and whether, you know, where Switzerland will end up as a result. That's a problem, but here's an opportunity. So try and see how you can match both of them together. I'm no one to advise, but just wanted to add this comment. Thank you.
Well, again, not the question, but that's why I take the opportunity to say a few words who go into the same direction. I firmly believe as well that for Switzerland, for the Swiss financial market, I think this financing need is a huge opportunity. I mean, the whole of the world is banking here. We have so much know-how. All those few players active in the field I am active in, most of them come from Switzerland. Why? I don't know. It has to do with what Mr. Kara said. Switzerland has a certain ecosystem that promotes these kind of ideas. Also entrepreneurs, I mean, we have all of us have done this without government support. So yes, this is a huge opportunity. And that's, of course, a message we try to give to the financial system here in Switzerland, to the big ones. But any help here is, of course, highly welcome.
Veronica, sorry.
So thank you very much. From my very short business experience I have gathered so far, I know that visualization has a lot of power. So I don't know your tools, but my question is, do you visualize to investors how big their impact can be, instead of priming again the old narrative, profit and risk? Do you really visualize it so they can see it on their desktop?
That's a very interesting question, because in this, there's some terms around the industry I'm in which may be or maybe not be known to you, like impact investing, these kind of things. And a lot is circling around the question, how can you measure and how can you show and how can you visualize? I am personally not so much a friend of that. We do it a lot. I mean, I have now not brought the brochures with us. Since day one, we've always communicated about the impact side. But actually what I would like to do, I personally don't think that we should create now that small impact niche market where all the well-intended people can bank and spend their money. And the rest, you know, can then say, okay, well, that's not for me. I believe that this is something that can be done within the very normal financial industry. Because, you know, impact, what you tend to do, you tend to go down and say, oh, look, this is so good for this African lady. And then you actually talk to the altruistic side of a person. Now, let's face it, I have never calculated it, but I think it's about 3% of the people who really would then, you know, do something. Talking about it is one thing, but really doing, like investing, only very few. But if we manage to show people what you think is so nice for this person is actually a normal benefit, like when you buy an Apple, an iPhone, and you've got a personal benefit, and that's why you buy it, and that's why this is a great business, and that's why this is a great investment. If you use the normal logic, then I think also those who are difficult to convince will be convinced, because this is what it is. As the gentleman before was saying, I mean, solving the world's problem is probably, you know, creates the biggest industries and is probably the best investment. If, and this is something that has also been a little bit in the room, if we apply long-term perspectives. Now, I think all the things that have been said about financing, yeah, the problem is that it is possible to act in an extremely short-term way. And this might be one of the fundamental problems. But if you apply a long-term view, then it's possible. But I would Yes, we do communicate about the impact, but I think you addressed the wrong side of the brains. I think this is not about emotions. This is not about altruism. Ultimately, this is about long-term intelligent behavior, which has also an egoistic component because it makes also economically sense.
So I also come from a field where it is good to take risks to maybe achieve a different future. I work in the arts, and we, together with my friends, I did some art projects in different countries, but it's quite difficult to find funding for that. But I think that cultural and artistic projects can have a huge societal impact. So I would wonder if you have any thoughts on that. Is it, how could you fund art projects, cultural projects in other countries? Do you maybe already invest in that? What are your experiences?
Yeah, unfortunately, the answer is no. You know, if you look at a society, there's thousands of things that make up a society, and all of them, or many of them, have to do with funding. Some they get funding because it's a business. Some are, you know, just strategically important. So, and it's not a business, then the government does it. Some, you know, society thinks it's good, then the civil society will fund it. We are concentrating only on very few sectors. I mentioned 5, but in fact we are concentrating on finance, agriculture, and energy, and we want to be good at that because that's already difficult enough. But there's no doubt that art, culture is important, but I think for a lot of developing countries, the fundamental problem is the lack of economic development, and I concentrate on that.
Robert?
We are often very proud that we are at the top of rankings concerning innovation. Yeah, Heinz Karrer mentioned it, and it's true. The University of Lausanne is making research of it, and often we are in the top of the hit parade. But I believe there's a problem. We only measure product innovation and process innovation. We have indicators like patents, research and development budgets, and number of researchers. But we underestimate social and institutional innovations, like pension funds and your activity in responsAbility. And do you see that we should change our measuring of innovation hit parades, including more social innovation, institutional innovation, and I see also the problem Mr. Hens mentioned, the older part of the population is risk averse. And I see a general tendency that the rich societies are risk averse, and we are a rich society. So how to change the measuring and how to change the mentality? That is my question.
Well, big questions. The first, of course, one could change the measurement system to draw again the attention. It's maybe a little bit what the lady before said, to draw the attention to something additional that is missing in that economic focus only. Now, it may come as a surprise, but in these situations, I always say, no, I favor economic indicators. But what we have to do, we have to show people that the things you want to measure or have to be included, that we show them, by the way, if you just think long term, this is economically also intelligent. So I think many more things than we think from today's perspective make economic sense if we just apply a long-term approach. We can again go back, and there's many people who know more about that than I do, but a lot of entrepreneurs in Switzerland have built a pension fund system without any pressure from the outside. Is it because they were really such nice persons? I think they were just intelligent. They knew, okay, I mean, if I'm in a village, and the villagers should be happy with me because they all work for me, and I earn already a lot of money, and so I better do something for them. And if they're not well off when they're old, you know, then there's something not so good for me. So they did this automatically, and I think we have to rediscover this instead of. I always say we don't need new speech, you know, new terms for giving things we already know a new meaning. I think we should understand that the right applied economic system, which means turning the things right, in my view, does the job. But we have overemphasized a few things, particularly that short-term button here is, everyone is very passionate about it, where I have to say, no, forget about the short-term thing. Turn around the long-term one, which means also this focus on liquidity and all these kind of things, which for me is totally stupid, because anything that's liquid shouldn't be invested, so it can't be called investment. Anyway, so I rather would say, let's try to use the existing system, but use it in an intelligent way. And then we will see that social dimensions are not just social dimensions for the people who are a little bit social. No, if you're intelligent long-term, then you think, yes, this is business, and this makes sense. And if I don't do this, I will be worse off long-term. But the answer is always long-termism in my view. And the second question was whether...
The measuring of it, and finally, how to change the mentality.
Yeah. Yeah, it's this, long term. Also, I mean, I think that has been said a lot, often here, education, and also in the break we discussed it. I think we've got a great education system. We know it, we rank also very well and so on. But can it be that in the face of totally new challenges every individual in this society faces, which is so close to economic realities, that all my friends, they have all higher degrees or so, they all have no clue about finance. I mean, I have not so many friends in finance, by the way, so that's maybe, but my normal friends, they have no clue about finance. They have no clue about economic systems. They are totally critical about that. They're ordinary people. Many of them are entrepreneurs. They have no clue. How can that be? And the young who get out of school today, they know so many things, but the most fundamental things when they shop on internet or whatever, that they are the target of a bright strategy which involves, prices and market mechanisms, they have no clue. So, I mean, that can't be. And I think that's where we have to change something. And the other thing is, yeah, we should also give the whole thing some time, because this debate is already part of the change. And, these debates are now happening much, much more than in the past. I'm a very, on one hand, passionate but also passionate person. I think we also need some time, need to give the whole process some time.